Imran, before we get into the weeds, big picture, what's happening? How do you see these crypto markets right now?
Oh wow, what a crazy market! So it's been in a pretty structural downtrend for a while, right? That's no surprise to anyone. With the Fed withdrawing liquidity, with the not very nice macro backdrop, and a lot of froth needing to get taken out, that trend has kind of been in place for a while, right? Since the top in November last year. Um, Obviously we posted like our worst quarterly performance since second worst, sorry, not worst, second worst quarterly performance ever in Bitcoin, down 58.6%, and pretty abysmal. And obviously we're having a credit crisis, right? So the likes of Three Arrows Capital, Celsius, obviously the Terra Luna blow up. It's pretty much showing how much leverage there was in the space and who the irresponsible players were, right? Who were taking on too much risk and doing things that really they should have known better than to do, right? And so now the whole space is kind of purging all that. We're seeing where the bodies lie, basically, and it's healthy in the long run, right? So I don't think it's a bad thing in the long run, but obviously those who have not used leverage and who are taking a long-term view and have got some dry powder or have managed to hedge themselves, maybe with some derivatives like my speciality, will be able to actually benefit from this drawdown once we see the other side of it. And, it's not like we haven't seen these type of moves before in the digital asset space, right? So for those of us who have been in it for a while, it's not something to be scared of. It's actually potentially an opportunity for a longer term view and for the ability to, just average in. If you still believe in the space, you still believe in the tech, the adoption story, all of those things, and actually the fiat currency debasement that I think we all know is coming down the road.
So, Imran, you've just made the secular bull case for Bitcoin in terms of the technological revolution, something that I believe in greatly, the risk that you see in terms of fiat debasement in the future. But let me play devil's advocate. Let me take the opposite side of the argument just to hash it out. There will be folks who say, man, this has been absolutely dismal. You look at this performance, the market performance that we've seen here down from the November 21 highs, and then you fold in some of the factors, in fact, all of the factors that you just mentioned, specifically massive macro headwinds in the form of central bank policy, this incredible headwind of inflation that we see that central banks are trying to respond against. And then to make it even more specific to the crypto industry, the points that you just made in terms of forced liquidation, credit issues bleeding throughout the entire system. I'm sure there are folks out there who are watching this who are concerned about the short term, who are concerned about the intermediate term, even those who believe in the longer term bull case for these assets.
Yeah, I think you need to zoom out, right? I think you need to say to yourself, an asset, if we go back through the life of Bitcoin, right? Let's say we take from 2011, starting there. I mean, 2011 it was up 1,400%. 2013 it was up 5,500%. I mean, when you've got assets that can put in those sort of ridiculous returns, you've got to expect the occasional 80% drawdown, right? It kind of comes with the territory, right? So you've got to kind of think of this space as quite a different animal to any other asset class still, right? And people are saying it's maturing and all that. Let's be clear, a mature asset class doesn't wipe out 80% that quickly, right? So it's still finding its feet. It still needs a lot more adoption, a lot more understanding, and it needs arguably some regulation around the way people do business in the space so that you don't have these horrible blow-ups like 3AC, right? So I think hopefully we'll get there. I mean, for all we know, we've got another 50% drop coming, right? And this thing doesn't bottom out until we get to 10,000. Very, very possible, right? But the way you invest in this space and the way I've always invested in this space, and I only got in 2020, and I wasn't lucky enough to get in 2017 or before, where you would have made ridiculous returns. But the way I always thought about this space was it's a bit of a call option, which means you invest what you can afford to invest. You don't leverage yourself, and that money could easily go to zero in the next 5 years, but you're well aware that it could also do 10x in 5 years, right? and having some small allocation. And I've said this to my friends from TradFi, make sure it's a small allocation of your overall portfolio, right? Because you're not going to put, well, anyone who's been from a TradFi background, right, and who's run senior books and senior positions knows that they're not going to put more than 5% of their portfolio into a 100 vol asset, right? When it becomes a 20 vol asset, maybe you can put a bit more in. But in a 100 vol asset, you've got to think about your sizing. And if you put 5% max into it and that goes to zero, yes, you take a 5% drawdown on your portfolio, but that's it. You're limited, right? And if that position then grows and becomes a larger part of your portfolio, then that's fine, because that means you've actually made a ton of money and you're kind of running your winning position. But as a starting position, 100 vol asset, you don't go in bigger than 5%.
Important points about asset allocation, risk management, and position sizing. Imran, with that said, let's jump right in and go through the deck.
So this is part of my sort of macro insight, which is also crypto insight that I do once a week. And I run through what I'm seeing in terms of the charts on crypto, if there's any big sort of major stories that I'm following. And then I go through the volatility analysis. So what's going on in option space, what the flows are, what the vol curves are looking like, and if that's speaking to me, basically. The big thing, like we said, is the fallout from 3AC and Celsius, and it continues to linger in markets. And I think that's really what's keeping a lid on markets and making it quite hard for crypto markets to bounce alongside equities. Equities had a pretty strong rally last week before month end, as the market anticipated a bunch of quarter end buying flows. And, off the bottom, S&P was up something like 6 or 7% in short order. Crypto was barely off the lows, right? So, I was looking for crypto or at least Bitcoin to get to about 25,000 again. And it really couldn't even break 22,000. So really, really struggling. So there may well still be continued ongoing liquidations, redemptions from various funds now that the quarter has ended, and flows that might even be anticipation of that type of liquidation. And that's keeping a bit of a lid on things. I do think also that regulation is going to play a part over the next quarter, because the sheer scale of wealth destruction that's happened in the space and the noise that's been created around that is going to mean that policymakers feel quite empowered to kind of try and clamp down on the industry. We had the European Parliament agree on the terms of the MiCA bill that the European Commission have put through. And that's just a massive framework with a bunch of rules, basically, if you're going to do crypto in Europe. And that may well kind of slow down the pace of innovation in the space and put a few barriers up in the short term, at least. But, from the rule set that we saw, it wasn't as oppressive as some people were concerned about, which then might mean that it encourages more institutional investors over time, more service providers in the space, and ultimately more adoption longer term, which is what the space needs, right, over the next 5 or 10 years.
Now, do you see that as a short-term headwind, long-term tailwind? How do you think about the regulation risk or opportunity?
Yeah, no, I totally see it that way, right? I see it, people, it will have negative headlines around it maybe, and the back and forth and the arguing about what the rules should be and it's too stringent or whatever. And that might keep a lid on things, let's say, because it does slow down innovation and it does put some people off investing in the space or even building businesses in the space, let's say. But over the long term, without that regulation, without that clarity of how you can operate, and without bringing that confidence to people from other, businesses and other asset classes and industries, right? That will bring confidence, hopefully, that there is some oversight and it's not just the Wild West. And then over time, that can actually be a good thing. But it is a slow burner, and it's not something that's going to make the market rally in the short term, right? The short-term dynamics are very much driven around, the ongoing credit crisis and the fallout from that, and then the macro backdrop with all the liquidity being withdrawn from the system. And until we feel like there's a bottom in and we're seeing the Fed pivot that is starting to get priced by interest rate markets, until we see confirmation of that, you're probably not putting in a bottom on crypto for now.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.